Now get a reader on the week ahead and the economic data to watch. Pete McGuire from XM joins us now live. Pete, great to have you on a Monday morning. As always, we've got to do a bit of a wrap of those non-farm payroll numbers and the reaction that we saw in the US.
Absolutely. Good morning, Andrew. Good morning, Cara. 531,000. It was a very, very healthy number considering we were looking at about a 450 handle. So that was positive. And as you mentioned, I mean, you know, the Wall Street, as far as where it's going, it's just absolutely booming. And how high is the Dow going to get to? I mean, it's smashed through 35. It's through 36. Where are we by Christmas? At the forecast moving out, maybe we're a 37.5 handle. There just seems to be so much momentum to the upside for equities, and everyone's piling in. So it's hard to stand in front of a bull market, isn't it?
Yeah, Pete, what's your explanation for that reaction to the non-farm payrolls number? Obviously coming in much higher than expected. Yeah, we saw those bond yields come off, the dollar fell. Is this more about, I guess, the positioning of the central banks that we've seen, you know, with the Fed, the RBA, the BOE all last week, sort of a little more dovish perhaps than expected?
Absolutely, Andrew, very dovish, and considering I think that was very much felt by the markets. So they've all pushed back, as we know, and the story moving forward. I mean, we had the US dollar in the last matter of hours at 94.6, so it's back at about 94.25 at the moment. So it's been fairly strongly bid up. And I think the overall mood at the moment is we're watching those inflation numbers globally. We're watching certainly coming out of the States this week. I think that could surprise everyone to the upside as far as what sort of number they actually hit. And then in turn, that overall positive mood has been demonstrated across equities. Pound came smashing back. Gold was bid up nicely, up about 24, 25 bucks, Andrew. Oil's had a bit of a turnaround, was sold off heavily, and now it's back up about 3%. So very volatile across most of the commodity and currency markets, and certainly some of the equities that, as I said, booming.
Yeah, so what does that mean then for the local unit, the Australian dollar, just sitting below that 74 handle at the moment? Forecast for this week, what's on the data docket that could move it?
Cara, you always say that every week, so I don't know. I mean, it seems to be softer from here. Maybe we're at a 73.5 handle. I don't know. It's hard to pinpoint it. Softer across, the Australian numbers, and certainly where we go. We've got the employment numbers coming out this week. I'm worried about China, and I'm worried about where we go. Maybe it's a little bit softer from here. And of course, across some of those base metals, copper's back at 9,500, iron ore's soft, and the storyline there seems to be one of, a little bit of further softness for that Aussie. Let's see where the US plays this week. If it can continue to be about that 94.5 handle, then that's going to put, again, additional pressure on our side as far as Aussie. Kiwis, one to keep an eye on. We're getting closer. They're running at 71.13, and maybe they're going to be in front of us by Christmas.
And Pete, of course, inflation remains the big worry, I guess, for investors and for corporates at the moment. We do have a read out of the States with producer and consumer prices, likewise in China.
Absolutely, Andrew. And, worried about more mainstreet as far as the consumer, price of fuel, price of everything at, shops. We mention it every week, the inflation, the transitory mindset. It seems to be very much, is it transitory, and is it, further into a 22, late 22, even 23 sort of mindset to get it under control? Who knows? It's going to be interesting how that plays out, that whole storyline. And again, that offers great volatility to the markets and opportunity. So I think, from a trader's perspective, and they're the lens that I look through, it's all about opportunity, Andrew. It's all about what presents itself on a daily and weekly basis. And I'm continually not surprised in anything I see, because it's just opportunity everywhere, every day.
Pete, where's the opportunity when it comes to oil? I mean, you talked about price action in WTI. Given what's going on with OPEC, demand side, where is the opportunity there?
Well, I think it's already been baked in. It's 40% up, Cara, in the last matter of months, so it's been incredible. Are we going to hit a 90 handle? Everyone's saying 90's baked in, 100 even, and some of the forecasters saying we're going to be at a 121. So there's the upside that people have got to be conscious of as far as traders. And the demand picture is very, very strong. We've all understood that we're reopening the world, flights, cruise ships, you name it. So that's going to be more consumption. Trucks crisscrossing nations, as we know. So as all of that gets baked in, maybe that storyline is going to be increasing demand, increasing prices. And if you're a producer, you'd have to be rubbing your hands with glee.
So, Pete, overall, just as far as equities are concerned, I mean, we talk about, excuse me, where those indices in the States have been going, record after record, and then, we keep hearing about the likely Santa rally. Do you have some concerns about where this is all going?
Andrew, I think anyone's had a concern over the last 18 months, considering that where we got sold off to and where we are now. We've got the S&P, who could believe it? We're at nearly 4,700. I mean, every time 4,500 was like, wow, and now you've smashed through that. Is 5,000 the new handle for the S&P, and got the potential, I think, to be there with just that, strong move to the upside. Nasdaq at nearly 16,000. You got the Dow at 36 and approaching 36 and a half. So yeah, big push. There's probably further upside. Hard to pick a high. I mean, where do we go? It just seems to be the only place in town is very much equities, and that's being demonstrated by, the big push in as far as retail investors. Everyone's piling in, and I don't know where it ends up. It's just onward and upward at the moment.
In your mind, where are the risks, though, associated with these record highs? Is it in the taper, do you think?
Oh, it's got to be, Curry, as well as I do. If it sells off, it's going to be brutal. And if markets do sell off and they capitulate, you can quickly wipe a 5 or 10% off. So traders have got to be mindful of that. They've got to be hedging positions. They've got to be really conscious as far as, bad news stories or anything that presents itself that is an unforeseen, a black swan event, and that happens across markets. So I think that's the higher it gets, the more riskier it becomes for a pullback or a possible pullback. But at the present time, it's hard to put hand on heart and say when that pullback's going to be, presenting to us. The other side is, and Andrew mentioned, Santa rally. Yeah, it seems to be onward and upward. I think we're right in the depths of a Santa rally at the moment. And what are we? About 7 weeks to Christmas. So possibly the next 50 days could be quite exciting for equity traders.
Yep, Christmas comes early. Pete, thanks so much for joining us.
Andrew.
Hey, have a great week. Thanks for joining us from XM.
Thank you, Cara. Thank you, Andrew.